Hi guys, I'm Sangs, and today I'm going to talk about petty cash fund concept. Okay, so petty cash fund is an amount of cash kept on hand to pay for minor expenditures. For example, postage fees or small office supply fees. It involves three activities. So one is establishing the fund, two is making payments from the fund, and three is replenishing the fund. So the first activity is establishing the fund. A petty cash fund is established by writing a check for the amount of fund, cashing the check, and placing the cash under the care of an employee designated as custodian. For example, on 1st July, Jimmy Fashion Center cashes a $500 check to establish a petty cash fund and gives it to Julie, the custodian. The following entry will be made. This entry increases petty cash and decreases cash because cash has been used to establish a $500 petty cash account. Therefore, a decrease in cash leads to a cash being credited and petty cash fund being debited. Next activity is making payments from the fund. When the cash is used to pay for certain expenditure, the custodian then disburses petty cash from the fund in exchange for receipts related to whatever the cash has been spent on. But you have to remember that as payments are made from petty cash fund, no journal entries are made. It is only recorded when the fund is replenished. The last activity is replenishing the fund. As the cash in petty cash fund decreases, the fund must be replenished. This can be done by counting the remaining cash and the amount that the company cashes the check for. For example, with the above report, it shows that the fund needs $87 to be fully replenished. However, the receipt shows a total of 85 instead of 87, and this is where cash over and short comes on. But it will be discussed later in the video. But right now, let's assume that the cash requested to replenish fund and the total receipt show equal amounts of $85. Then the company will cash a check for $85 to replenish the fund. And the following entry will be made. The entry shows an increase in expense accounts and a decrease in cash account. Cash requested for replenished fund and total receipts sometimes are different. Therefore, cash over and short account is created. It is a temporary account that can have either a debit or credit balance. With the above example, we can see that the cash requested to replenish the fund and total receipts are different. Therefore, the following entry will be made. In this entry, cash over and short is debited to illustrate an increase in expense. That will be all. Thank you.